Hello everyone, hope you guys are doing well. This is part 2 of the same paper, that is May June 2023, paper 1 variant 2, and this is basically an MCQ exam. And in question number 11 they are saying Wasim received a bank statement. He found that the bank had charged interest twice in error and that a dividend had been received on an investment. So Wasim then updated the cash book and prepared the bank reconciliation statement. So where did he record these two items? So dividend basically comes with a direct transfer from the company who's paying the dividend to the account of Wasim. So that is basically you need to update the cash book for it, and the error that has been made on the bank statement, which the bank has made, that it has charged interest twice in error. That for that you need to show the correction in the bank reconciliation statement. So the answer should be B here. Okay, in the next question, they're saying Thembi is preparing her sales ledger control account. She needs to know the total for goods which have been returned by credit customers. That is basically your sales returns, and then they are saying also she wants to know the amount owed by customers which have been written off as irrecoverable. So where can she obtain this information? So basically all the information that has been that you record in the control accounts comes from the books of prime entry. So the sales returns will basically come from the sales returns journal. The account is a T account. The journal is basically the book of prime entry. So your answer cannot be A and C, that is for sure, because the account is a T account. You never use the T account for making the sales ledger control account. And then the other again here they're saying part B cannot be your answer, because when the total of the for basically she wants the information for the sales ledger control account, and sales returns come in the sales ledger control account. Purchases returns does not come in the sales ledger control account. So again B cannot be your answer. Answer is D. Yes, she'll use basically the sales returns journal to get the total of sales returns, and she'll basically use the general journal to see how much has been written off as irrecoverable. Okay, in the next question they are saying on 1st August the sales ledger control account had a debit balance of 1800. During August, a debt of 200 was written off as irrecoverable and 10,000 was received from credit customers. On 31st August, the credit customers owed 3,000. So basically this is the ending balance of trade receivables. So if you make a control account, so basically you need to know the format of the control account here. Balance brought down, that is trade receivables. Basically sales ledger control account is the total of trade receivable account. So the balance brought down here is basically the total trade receivables at the start of the month, and then the balance carried down here is basically the total of trade receivables at the end of the month. This is basically your balance carried down. Irrecoverable debts will come here because irrecoverable debts decrease your trade receivable balance, and when your trade receivables pay you, your credit customers, when they pay you, that also decreases your trade receivable balance. So basically that will come on the credit side of this account. So here is where you will find your credit sales. So if you total the credit side, that is you get 13,200 on the credit side and 1,800 is the debit side total. So what you'll get here is 11,400. So your basically credit sales is 11,400. Okay, question number 14. A wholesaler had the following transactions: sold goods 30,000 on credit, received a check 12,000 from the sale of old fixtures at book value. So whenever sold goods on credit 30,000 is basically your revenue receipt, because all the items that go in your income statement, so if they are revenues, they are basically revenue receipts. All the items that are going into the income statement, if they are expenditures, those are revenue expenditures. So sold goods on credit will basically go into your income statement and it is your revenue receipt, and the amount that has been received from the sale of old fixtures at book value is basically going to be your capital receipt, because it's like when you sell off a non-current asset, that becomes your capital receipt, because it's like a one-off transaction. You wouldn't sell your non-current asset every other year. You would do it in 4-5 years or 2-3 years maybe, not every now and then. So basically this is a capital receipt. Also, whenever you buy non-current asset, that is capital expenditure. So whenever you're selling non-current assets, the amount that you're receiving from the sale of non-current assets becomes your capital receipt. So here the answer should be C. Okay, question number 15 says a trader debited the cost of repairing office equipment to the office equipment account. So basically repairs was put into the non-current asset account. So that means your expenses are understated, which means your profit is overstated. So C and D cannot be your answer. Also, if you put the cost of repairs into the office equipment account, that means you have overstated the non-current assets here. So your answer should be A. Okay. Question number 16 says a business bought two assets X and Y on 1st January 2022 for 2,000 each. If it depreciates asset X by 10% per annum using the straight line method and asset Y by 10% per annum using the reducing balance method, which statements are correct? Asset X will be fully depreciated before asset Y. If you look at this, basically the other statement here in 2022 the depreciation charge is lower for asset X than for asset Y is basically an incorrect statement. Why? Because if you apply the straight line method or if you apply the reducing balance method, the first year depreciation basically stays the same if the percentage is same. 2000 multiplied by 10% is 200. Again, if the RBM formula is applied, 2000 minus 0 is the accumulated depreciation multiplied by 10% is again 200, which means that first year's depreciation is going to be the same. So your answer cannot be B and D, because the statement that that the depreciation charge for asset X is lower for asset X than for asset Y is wrong. So option A and C, if you try to judge which option is correct. So asset X will be fully depreciated before asset Y. Yes, because whenever you're using the RBM method, the thing is that depreciation expense never becomes depreciation expense never becomes zero. It's like a fact, because you always keep on applying the percentage on the NBV. So your depreciation expense never becomes zero. So it keeps on reducing the depreciation expense, but it's still an expense, still an amount for many years. Your depreciation expense never touches zero here. So your answer should be C. Also, if you multiply 10% and if you just do it in a working as well, so your asset will be fully depreciated. In case of asset, basically asset X will be fully depreciated in let's say if it's 10%, so in 10 years this asset will be fully depreciated, because 10% per year, so 100% totals in basically your 100% depreciation will be charged in 10 years. So in 10 years this asset will be fully depreciated. But if you use the RBM method, the depreciation expense never becomes zero here, so there's some amount of depreciation every year. Okay, Ravi's financial year ends on 30th April. Ravi bought a motor vehicle for 8,000 on 1st May 2020 and sold it for 4,050 on 1st May 2022. He uses the RBM method at 20% per annum. What would be recorded in the income statement for the year ended 30th April 2023 for the disposal of motor vehicle? So here basically you need to calculate profit or loss. If your 8,000 is your cost, also if you're buying it on 1st May, so that means your first year is basically 2020 and your second year is basically 2021, and if you're selling it on 1st May 2022, which means 2022 is not the year that you're basically it's that year that you're selling. So basically this asset will be depreciated for 2 years, May 1 2020 to 30th April 2021, then May 1 2021 to 30th April 2022, and the next day you're basically selling it. So if you depreciate this asset 8,000 minus 0, so cost minus accumulated depreciation multiplied by percentage, so 20%, you get 1,600 here. And then what you do is 8,000 minus 1,600 multiplied by 20%, should give you how much? So this should give you 1280. So your total depreciation that has been charged is 2880 when you have sold this asset. So your net book value will be 8000 cost minus accumulated depreciation, that is 2880, which is equal to 5120. That is your net book value, and you are selling it for 4050. So when net book value is greater than your selling price, so 4050 is the selling price, net book value is 15120, so the difference is basically a loss. So the difference here, the loss will be 1070 loss. Here the answer will be C. Okay, the next question here, question number 18. On 2nd January, Razia wrote off 450 owed to her by Annette, a credit customer, as irrecoverable, so Annette cannot pay. On 2nd October, Annette paid $100 by check in part settlement of the debt. So which entries would Razia make on 2nd October? So she wrote off Annette on 2nd January, and then later in October Annette realized and paid Razia part of it by check. So basically when your trade receivable comes back, you make that person your trade receivable again, you write here Annette, you write here 100, and then debts recovered credit and 100, and then when she pays you do bank debit, Annette credit, and you need to write 100 on both sides for this as well. So now Annette has been debited once, Annette has been credited once, so bank debit and debts recovered credit should be your answer for question number 18 is A. Question number 19 says, Asha provided the following information about her inventory at the end of financial year. What was the total value of Asha's inventory? So you should know the rule. The inventory is valued at lower of cost or net realizable value. So here net realizable value is basically the selling price. NRV is the net realizable value. Whenever you will sell the inventory, you will realize this amount. Cost price is basically the amount at the value at which we had purchased the inventory. So if the product P is, let's say product P was for 2.5 and the selling price is $2, so you need to select $2, whichever is lower. So if cost is low, you select cost. If NRV is low, you select NRV. So 2 into 200 is basically going to give you 400. That is the total for product, total value for inventory for product P. And then for product J, you need to select $3 because $3 is lower than 3.5. So 3 into 300 is going to give you 900. So now the total of your inventory is basically 1300. So the answer is A. Then they are saying which group, okay, question number 20 says which group contains only service businesses. So a bookshop has is not a service business, so it's a product based business because books are the products here. So A cannot be the answer. Jewelry repairer is a service business. Taxi firm is a service business. Food store is not a service business because in the end you are receiving a product that is food, so this cannot be your answer. Okay, C can language school is a service business, yes. Taxi firm is a service business, yes. Jewelry repairer again is a service business, yes. So C is your answer. D also cannot be your answer because food store is not a service business. Then question number 21, what does the statement of financial position of a business show? So the statement of financial position will basically show assets and liabilities at a certain date. So basically you will have assets, liabilities, and basically capital at a certain date. Calculation of annual profit or loss that your income statement will show. Changes in equity during the financial year is not the only thing that your statement of financial position will show. Capital section is there, yes, but assets and liabilities are also there in the statement of financial position, and also assets minus liabilities give you the value of capital. So yes, this cannot be the answer. Income and expenditure for the financial year, no. So your answer should be A, assets and liabilities at a certain date. So yes, we'll continue for the next few questions in the next video.